scare. I mean, the thing that could really disrupt the commodity thesis would be a worldwide recession or a worldwide depression, an absolute collapse in confidence. And that is one thing that I'm nervous about. I'm not an economist, so I'm not one to stand on a soapbox because I don't have one and say that 2008 is nigh. But a circumstance where you had a simultaneous loss of confidence that was expressed in a recession and expressed in a seizing up of credit, ironically, conventional credit around the world, would certainly derail my thesis. I am certainly one who believes that the excesses need to be wrought out of the economy. I believe it can happen, as we saw in 1980, in the early part of the 1980s. You don't need to eliminate or even reduce government spending. You need to reduce it as a percentage of GDP. In other words, you need to reduce its growth. If we allow individual initiative over time to rebound and increase our wealth as a society, we can grow our way out of our current circumstance. The thing that bothers me is that we're not doing it. We're trying to consume our way out of its current circumstance, and you don't consume your way out of debt. That's not the way it works. So thank you for asking that question. The big fly in the ointment would be a recession or a depression. And recessions are often the result of overly stimulative fiscal environments like the one that we've been in for a long time. I mean, I think ironically, the way out of that is probably in emerging and frontier markets. You know, I really believe that there's a chance that the next Google won't happen in Sunnyvale, that it will happen in Lagos or La Paz or Phnom Penh. I'm really attracted, as an example, to see the technology venture capital startups that are happening in Africa, and the ability that the bottom half of humankind, the ascent of the bottom half of humankind, both in terms of solvency, but also education. I really believe the way out for those of us in the developed world is to encourage the undeveloped world to unlock their potential. I think the way out for us is certainly not in Ottawa. It's certainly not in Washington. I think it's in Lagos and Phnom Penh and La Paz and places like that. And I'm very bullish about that.
Mm-hmm. So Rick, as part of, you know, our thinking about, let's say, the precious metals case in general, how do you think the rise of cryptocurrencies and the digital economy as a whole has affected the demand and attractiveness of the metals?
Those are two separate questions. So let's deal with them sequentially. With regards to the demand side, I think probably crypto and precious metals have competed on the speculative fringe, which is to say partially my audience, partially your audience. Younger people who are attracted to alternative investments. But the truth is that the combined market capitalization of precious metals around the 8 trillion mark, and the combined market capitalization of cryptos around the $3 trillion mark, you're talking about an $11 trillion market capitalization in a world where the total market capitalization of savings and investment assets worldwide is $650 trillion. Which is to say the combined market capitalization of crypto and precious metals is infinitesimal. Mm-hmm. The gold market will move, not necessarily when the Reddit crowd, or if the Reddit crowd were to shift from crypto to gold. It will move when the Harvard University Endowment, China International Trade and Investment Corporation, Norges Bank, the big insurance companies of the world come to understand that their traditional reliance on a model that's 60% equity, 40% debt doesn't work when debt has a negative real net present value. When you begin to intermediate the bond holdings of the biggest institutional investors in the world because of negative real interest rates, you will see a move into tangible assets that will make the silver squeeze, the alleged silver squeeze that we just went through, look silly.
Mhm.
Now, the second part of this is a really interesting thing. I've invested a lot in it, and I don't really know what I'm doing. That has to do with the application of the distributed ledger and blockchain on the trade in gold and silver. I really do believe that eventually most savings and investment activities will switch from markets to the blockchain and the distributed ledger. The idea that you could have a storage intermediary, I would love to see it be Sprott, of course, but there will be various trusted storage intermediaries that develop precious metals and precious metals related tokens, which are effectively frictionless, and where trust in the exchange is community based via smart contracts. I think if you eliminate the friction that's present in precious metals, that precious metals again return to being money. I actually believe that the time will come very shortly, 5 or 6 years from now, when you can use a fraction of a silver coin to buy a cup of coffee, and that you can move precious metals back into being simultaneously a store of value and a medium of exchange. And I think that crypto, if you define crypto as the blockchain and the distributed ledger, will ultimately be the biggest allies that precious metals have, because it will democratize their use. They have always been a store of value, but they will be able to be returned to being a medium of exchange as a consequence of the distributed ledger.
So in your eyes, it's an and situation of the crypto world and the precious metals working together to increase the efficiency and seamlessness of being able to transact with the metals again, right?
Absolutely. And I certainly think that there is a future for cryptocurrencies too. I don't own them well, and I don't know them well enough to own them personally, but that doesn't matter. The fact is that I'm a consumer of currencies. I spend Canadian dollars, I spend euros, I spend US dollars. And the idea that there's a whole bunch of smart people out there trying to define or develop a new currency, which would be of use to me, is hugely beneficial. Why should governments have all the fun? The currencies that I'm likely to